So, in continuation with rural development, we are going to talk about the sources of institutional credit. And in this, we are going to talk about, say, the banks, the cooperatives, and other such steps that the government has taken. So just look at this and take a quick look at this. So these are what is known as the institutional sources of finance, credit, rural finance, rural credit. So in here we have, say, the cooperative, the commercial banks, the regional rural banks. So they initially they accounted only for about 7% of the credit needs of the farmers beginning first 5-year plan. And now in these days it's, say, around 66%. So we've come a long way, if you see. So in this, out of the total institutional credit, cooperative credit contributes nearly 15% and commercial banks about 75%. So there has been a great expansion in the flow of credit by commercial banks and RRBs, that is regional rural banks. The cooperative credit institutions have come out as important institutional agencies that offer credit support and related services. So in this, let's just talk about the cooperative credit societies. They give the farmers credit at a reasonable rate of interest. And they also, what is important is that they give guidance. They guide the farmers in diverse agricultural operations with a view to increasing crop productivity. And so presently cooperatives account for 16 to 17% of rural credit flow. And the cooperative credit societies, they ensure that a timely and rapid flow of credit is given to the farmers. It is there, and it has done away with, say, money lenders, their influence on the farmers, especially the marginal and the small farmers, and they have spread credit facilities across all regions of the country, and they have provided enough credit in areas covered by special programs of development. Then you have what is these commercial banks, which were nationalized in 1969. So the government soon realized that the rural credit needs could not really be met just with cooperative credit societies alone. And they felt that the commercial banks also should play an important role, and they could play an important role. So with the nationalization in 1969, they were directed to offer credit directly to the farmers as well as indirectly through cooperative societies. So that was very an important change that we noticed. Then we talk about the regional rural banks and the land development banks. They were set up and they were to give credit in the remote areas, rural areas and backward districts. And these regional rural banks, as the word region states, they operate at the district level and they are under obligation to focus mainly on the weakest sections of the rural population. So they've also done their bit. And then we have what is known as the NABARD, that is a National Bank for Agriculture and Rural Development. Now this is an apex institution, the main institution, the head institution that handles policy, planning and operations in the field of rural credit and rural economic activities. So its main functions are to serve as the main funding agency for institutions providing credit in rural areas, and also secondly, uh, it aims at taking appropriate measures to improve the credit delivery system. So they focus on how to revamp the credit institutions or restructure the credit institutions, and training the people there, the personnel. Then third is that it sees that to coordinate the rural financing activities of all credit institutions, and they maintain liaison with Government of India, state government, Reserve Bank and other national level institutions concerned with policy formulation, this is very important, because for policy formulation they are the ones that give data, they keep in touch with everybody, like for example the Government of India, state government and other national level institutions concerned, so that to coordinate with the rural financing activities, and then make any policy based on them. And of course the most important again is it undertakes monitoring and evaluation of projects that are financed by them. So that is also there. Then you have what is known as the micro finance self-help groups which have come up. The self-help groups have come up with what is known as microfinance, which are also important. It's in rural credit. So the self-help groups, they promote the saving habit among rural households, and these small savings are collected or mobilized by the self-help groups, and they are offered as credit to different members, which depends upon their needs. Say for homework, I want you to find out what is the logo of these self-help groups and micro credit programs. And this credit is offered without any security. See, which is very interesting. What is interesting is that credit is offered without any security and at a moderate rate of interest. And nowadays, presently, more than 7 lakh self-help groups are operating across different rural areas. Credit provisions are known as microcredit programs. And these programs are quite popular among small borrowers because of their informal credit delivery mechanism and having very little legal formalities. So having said that about the institutional finance, let's see how much has been done, or let's just critically see what we can talk about, if we can talk about these. So looking at this, of course rural banking in India has expanded over these years, and particularly after nationalization of the commercial banks in 1969. So rural banking actually started with that, which means the rural people started getting credit at very low rate of interest. Then also regarding the establishment of NABARD, it has made a difference again in rural credit, because now it has become much more organized, and it has gone a long way in freeing the farmers or liberating the farmers from the debt trap of the Mahajans and the money lenders. And it has also helped in promoting commercialization of agriculture. But we find that problem with the banking credit and the institutional credit, what was a basic disadvantage? Let's just see why the farmers were shying away from this institutional finance. Though we have talked so much about its advantages, the problem was that this institutional credit was tied to a collateral, which means a security or guarantee of a property for the loans. Because of this, a large section of small and marginal holders, landholders, they were left out. And of course, another point is that owing to political populism, government showed they were lax. They were not strict in the recovery of loans. So the default rate started rising over a period of time, which was not good for the banks themselves. So they started going in the red. And apart from commercial banks, most financial institutions failed to develop the culture of this, what is known as saving for the future, the culture of thrift among the farming families. So, and of course, in 1991, the rural, the banking, the social banking in rural areas, it took a hit. It wasn't as good as it went on from 1969. And we find that the impact of debt on farmers is becoming so huge that suicidal deaths are rising particularly in the states of Andhra Pradesh, Maharashtra, and it is for the government to really decide and to come up with rural banking as a social need for production purposes rather than for just political popularity. So this is what we talked about. In fact, you can get a question as explain the sources of institutional sources of credit and its merits and demerits you can talk about.